Hi everyone and welcome to today's video. Now this is a webinar with my BD members, okay, and what we're going to basically do is go over the bends and pullback strategy. I want to show you why it's so good and why I would say that every trader needs to learn it, especially if you're a beginner. This is a really good strategy to learn if you're new to trading and you want to get into trend trading. If you want to learn how to trade with the trend and how to trade pullbacks as well. I'm sure you heard it, trend is your friend. You want to be trading with the trend. Now this is the strategy for that, okay? It teaches you to understand how to get into trades with the trend, okay? So the BD members, you can ask any questions. Hi everyone. So first of all, I want to show you some of the success with the bend strategy so far. Okay, if I just go over, okay, this is some of the results with the bend strategy. Okay, so you can see here, bend strategy. I'm starting to think this is one of the best strategies with the binary destroyer. You can see some nice little binary trades from one of our members. Again, hi Jamie, I'm doing really well with the bend strategy. Today I made 4 times my payday in Portugal, so awesome. But on the side note, I've been monitoring the Mogwai signals. Again, Mark, one of our full-time traders, watched the webinar. It was so good, I had to give the bends a go. Haha, basically Mark made 4 grand trading the bend strategy. And I received this today, as you can see, I received this today. This is a screenshot on my phone, and it says, I've seen massive improvements. Mogwai is great, but let me say the bend strategy is fantastic. $130 to $694 last trade. They close the assets. Ha ha ha. Anyway, thank you, Jamie. Right? So with that out of the way, okay, let me just add a few members into this, okay. Now this webinar will probably go on for about 20 minutes, half an hour, so do stick around. So as the BD members will know, we have 5 strategies with the binary destroyer, and every single one of them is slightly different to each other, okay. So our 2 trend trading strategies are the bends and pullback strategies, okay. These are what you would learn and trade if you want to take trades with the trend, okay. And then we also have the BD, Mogwai and strategies. These strategies are trend trading strategies and ranging strategies, okay. I'll give you an example now of the Mogwai of what I mean between a trend and a ranging strategy, okay. So if we head over to the charts now, let me just move my webcam up here, okay, and we head over to USD CAD, okay. Now as you can see on USD CAD, price is going sideways, okay. You see this? Okay, so this is a range in the market. Price is consolidating. It's bouncing between a resistance at the top. Okay, so you can see the little resistance area at the top here. And you can see a nice little support area at the bottom here. Okay, so this is a ranging currency pair, and you can see here we start to get Mogwai signals, and we can actually capture that. I mean, that's a nice little Mogwai signal. Again, the MACD and RSI overbought. If you understand this, you know that is around a 95 pip move. Okay, so if we just keep going here, okay, we've got a nice little trend signal here. If I just zoom out, okay, we've actually got, okay, a nice little, in fact, 2 trend signals. If I just zoom in on my charts here, okay, so you can see here, this is a nice little Mogwai signal with the trend, trend down, pull back, nice little signal with the trend, we trend down, we pull back, and guess what, nice little signal with the trend, and we trend down. Okay, so these are signals with the trend. Okay, and we've also got, if I just delete this again, we've also got ranging signals here. The downside, Connor, I will share the settings after this video, okay, because obviously this is going on my YouTube video. I don't particularly want to share all the settings with you lot. At the end, I will share that, okay. The downside to the Mogwai, to the BD, and to the AND strategy is you're going to get signals like this that are against the trend. Okay, you can't do nothing about it. It's just part of the strategy. And I believe this is where a lot of members kind of fail. They see the MACD RSI overbought or oversold. They see the signal arrow and they enter trades like that. But in realistic terms, that is nowhere near a support line. Okay, so you wouldn't take that. It's against the trend and there's no clear support line. Okay, we want to see clear support and resistance areas like this as well. So the downside to the Mogwai strategy is it will give you signals against the trend, which is what you want to avoid. But if you want to trade signals with the trend, we would then trade the bends and pullback. Okay, now we've got two examples. We've actually got one example here, Euro USD on the binary destroyer, the bend strategy, and we've got Euro USD with pure price action. Okay, and I want to show you why there's such a good why this is such a good strategy. Okay, so the bend strategy and pullback strategy is a trending strategy. The idea is we get into trades at the top and bottom, at the top of a downtrend, and obviously at the start, at the bottom of an uptrend. Downtrend, yeah. So obviously when we're going into an uptrend like this, we want to be getting at the bottom of the uptrend and riding it up, and then vice versa, when price is going down, we want to get at the top of a downtrend. Okay, now I've got some moving averages here. Realistically, it makes no difference if you're using the BD signals. I prefer the BD because it's slightly more easier to understand. Okay, but the idea is we get into trades with the trend. So as we can see here on Euro USD, this is the 1 hour chart. We can see that price is above the moving averages, and like I say in my videos, when price is above the moving average, it's an uptrend. When price is below the moving average, it's a downtrend. Okay, so you all understand that logic. It's the same with the binary destroyer. Okay, if we go over to the binary destroyer, it's a little easier because this turns green and this turns red. Okay, so when it's an uptrend, this turns green, and when it's a downtrend, this turns red. Okay, so it's vice versa. So you can understand here, when we get something like this here, so look at this move here, what's that telling me? Okay, that's telling me right now that price is looking to reverse into a downtrend. So that's all I want to know is what's happening. We went into an uptrend and then we're now broken below the moving averages, and we are potentially looking to go into a downtrend. Okay, this doesn't mean get into a trade. It doesn't mean sell the market. It just tells me that Euro USD is getting weaker. Okay, and we are potentially reversing. Here is a prime example of this here on the 4 hour chart. Okay, so this is the 4 hour chart, and since the 6th of July, so since the 6th of July, today is now the 26th of August, so over a month now, Euro USD has been above these moving averages. Okay, right, but now we're slowing down. We're starting to trade below the moving averages. So what's that telling me? That Euro USD was in a strong uptrend and is now potentially slowing down and looking to reverse. Okay, how do we know that? We go over to the higher time frames again and we'll try and work out why price is slowing down. Okay, and you can clearly see, this is the weekly time frame, that prices come up to this area here. Okay, again, if I zoom in, you can see on the weekly time frame that we are starting to see rejection wicks on top. Again, when wicks are on top, it means price is being pushed down. Okay, when we get wicks on bottom like this, it means price is being pushed up. Okay, let me just add a few more people into this webinar. So you can see on the daily time frame, okay, we're starting to create a double top pattern at this resistance area. Again, look at the RSI MACD, it's slowing down, okay, as price goes like this. So I go down to the 1 hour charts now, which is my time frame. We just zoom in like this, and I've got the idea in my head that price is slowing down and looking to reverse. Okay, now for us to confirm a trend change is happening, we're looking for three things. Okay, three moves. Okay, everyone calls it different things. I just call it three moves. You know, people call it like Elliott wave effects. Kind of everyone has their own little term on how they call this, right? But I just keep it simple and I say you've got a trend up like this, okay? So you got to trend up, you got to pull back, you got to trend up, you got to pull back, you got to trend up, okay? If you want to be Pacific, okay, you know, we've obviously got our higher high there, a higher high there, a higher high there, again a higher lower high, a higher low, and like vice versa, okay? Now, bear in mind, just remember our moving averages are like this. So let's just say our moving averages are like this. Okay. Now, what happens when price does this? Just crashes down. Okay. If we actually go over to Euro USD, okay, and we go over to the charts like this, okay, that's exactly what happened here. Price just dropped. Okay, so again, I'm seeing that price is slowing down. Now, this is my first confirmation to get ready for a trade. This is a trend down now. I can see prices below the moving averages and we're trending down. My next move is a potential pullback. At this point in time, we can either go back up, form a double top, or we can go completely higher, okay? Or we can do a pullback in the market and then look to continue down even further. So this will be our free confirmation move. A trend down, a pullback, a continued trend down. And what we want to do is get into trades at the pullback here, okay? And we do this using a very, very, very good thing as a stochastics. Now we also use the, we also got the binary destroyer and our arrows that do this for us, okay? But I'll show you the power of both the MACD, RSI and stochastics. Now, if I just bring up, okay, a blank chart like this, okay, let me just show you an example of a setup here, a clear setup. No, I don't want to use that one. I'm looking for something that's really good. Okay, it doesn't really matter. Okay, I'll use this example here. Okay. No, I won't use that one. Excuse me. I'm trying to find a setup that makes it simple for you to understand. Okay, here's a good setup here. Right. Okay. So we've got a trend down here. Right. As you can see, trend down, pull back, trend down, pull back. Okay. Now, for me to get into a trade on a pullback, I use the stochastics. I don't care what other traders say. Okay, because everyone has their own little kind of style of teaching people and their own little style of trading. The stochastics is perfect for spotting pullbacks in the market. That's the only time I'll use it. It's too volatile to tell us when the market's overbought or sold because it's constantly going up and down. Look, you see how much it goes up and down? Okay, it can be very, very volatile like this, okay? But it's a really good confirmation for getting trades in with the trend. You can see here we have a trend down, okay? And we go overbought on the stochastics, and this is what I use to enter trades on a trend. So we can see here we have our first move down, we have a pullback, the stochastics goes overbought, and then we ride the trend down. Okay, now these patterns happen all the time. I mean all the time. Okay, I mean even example here again, uptrend. Okay, uptrend. You see that? It's quite obvious prices in an uptrend. Again, let's look at see where the stochastics oversold here. The stochastics is oversold here. Okay, and we use this to trade with the trend. Okay, so as you can see here, it's quite simple. Now, why should you learn this strategy? Is because it's just awesome for taking trades with the trend. It teaches you to spot when price is slowing down in the market. As you can see here, we've been trending below these moving averages for about, I don't know, since the 4th of February. We start to go crossing over here, okay, and what's that telling me now? Again, price is looking to reverse to the upside, okay, so it's good. So again, I'm looking for that confirmation. When do we go overbought, oversold on the RSI? Okay, and it was up just here. Now, again, you could enter down here. A more experienced trader would enter maybe down here somewhere. But if you wait for the stochastics as well, they happen everywhere. I mean, here's another example here, okay. We cross down below, we cross over, again, stochastic goes overbought, and then we ride the trend down. So you can see here, if you're trading this strategy as a beginner, you start to understand trends, pullbacks, and continuations and stuff like that. Okay, now let's look at the same combination with the binary destroyer. Now let me just show you something. Okay, I'm logged into my demo account at the minute on Go Markets, but I was actually logged into my other broker. I'm not going to tell you what binary broker I use, but I have got it on another screen on the left of me. You can't see it, but I took a trade on GPCAD. Okay, I took this trade on binary on the 1 minute charts. Okay, and again, look at the same principle here. Okay, we crossed over on the BD lines. Okay, the BD line turned red. We did a nice little pull down, trend down, pull back, trend down. Okay, now as you can see here, I've drawn a support and resistance area. Okay, so in price action terms, we did a break, retest of this support line before continuing down, and I actually entered on this point here. If you're trading the binary destroyer, obviously we do have our own little set of rules on when we enter the trades. Ideally we want to be in this zone here, the zone between the green and the red. Okay, so yeah, as you can see here, if we go over Euro USD again, I actually called this trade live on Sunday's webinar. Okay, again, you notice how we're above the moving averages, the BD lines. We're going above the BD lines. Then we did a nice little, we cross over here. We did a nice little trend down. We did a nice little pullback, and the price pulled perfectly in between the two zones, and the stochastics again overbought, confirmed that trade, and we actually took this trade down, and I also re-entered again on this time here. Now when you take trades like this, you always want to target the bottom of this low here. Okay, the reason being is because you know it's going to get hit. Okay, this acts as a support line, as you can see here, but you know, if you enter at the top here, price is at least going to go down to this zone here. If you look to go any lower than this, what I would do is, as soon as price comes down to this initial level, move your stop losses to around 15 pips and then ride the trend down. Okay, this particular setup went around 116 pips. Okay, so you can see here, this is a really good confirmation. Again, we've got a really good example of that here. Again, we've crossed over. Okay, we do a trend down, we do a pullback, we pull back perfectly in this zone here, and then again we continue down. The stochastics confirms that. Okay, now you can get into the BD arrow. Okay, the BD arrow is here. Now again, 9 times out of 10, when you get these BD signals with the trend, they will deliver. Okay, as you can see here, you know, nice little signal here with the trend. It gave me 33 pips. This trade here with the trend gave me 120 pips. Okay, again, here we've got a nice little setup. We didn't actually get a BD signal here. Okay, this is the bend strategy, by the way, Rory. We didn't actually get a buy signal here, but again, look at the pullback, crossover, look at the stochastics as well, and then we can take that trade up. You might have struggled with this one. Wait till he tells us there's no much option to choose anyway. At least he will know it's 100% withdrawal brokers, as he will not tell us until he's for sure. I think Jamie uses option field for binary. I'm not going to tell you what broker I use. Like I said, I want to get a few withdrawals in before I can safely say I'm happy to promote them. Okay, I don't want to promote brokers and they don't pay out. Okay, because it looks bad for me. So that's why, if I'm happy, you lot are going to be happy. Okay, here's another example. Right now, this is the good part about this strategy here. Right, and if you're sensible, boy oh boy, can you make some pips with this. Okay, so again, look at this crossover. It would just move that up here. Look at this initial crossover here, right? We trend up like this and we get into this trade here. Let me just move this, okay, over here somewhere. Okay, look at the crossover on the stochastics here. Now, if we'd entered at the bottom of this uptrend, and we just add a few more people into this group here, if we bought at the bottom of this uptrend, this particular trade could have given us well over 800 pips. I mean, this trade's still going. Oh no, when I say 800 pips, 600 pips. So 540 pips we could have got out of this trade just by understanding when trends happen. So do you know if anyone is using BD for FTMO? I'm not sure. You'll have to ask the BD members, okay? But these setups happen everywhere, okay? Now, because we're trading the 1 hour charts, we can trade this while still occupied in a day job, if you've got commitments. How we do this is, like I said, you do your analysis like this on the 1 hour charts. Let me just load up the Ben strategy on the USD CAD. Let's go over to the 1 hour charts, okay? So the way I look for setups like this, here's a really nice setup as well on USD CAD, okay? Look at this nice little setup here on USD CAD, okay? Again, look at this trend down here. We cross over, nice little trend down, pull back. Look at this, inside the zone, stochastics overbought, ride the trend down. Okay, now because we're trading the 1 hour charts, we can see this happening before it actually happens. Okay, you'd see the crossover of something like this here and you think, great, look, this is our first confirmation. Remember what I said? Okay, our first point. Okay, let me bring it back here, our first point. So you would see the crossover, you would see our first point, you would see our second point, you would see the stochastics, you would see that we're in the zone, and then we take a trade and ride it down. Okay, again, you could enter on the BD arrow if you want. Again, that BD arrow would have won. But what I'm trying to show you is if you can spot the trends happening, you can enter way, way, way before an arrow appears. Okay, and to give you an example, if you'd entered on the arrow, okay, you would have got 103 pips. If you'd entered where I would have entered, maybe around here somewhere, you would have got 120 pips. So that's almost a difference of 15 pips better off. A few people are running the BD on funded accounts. Yes, I do believe there are a few people doing this challenge with the BD. They are running it on a challenge. I can't tell you exactly who they are, but I do know a few people are. The reason why they do this is because if you can get a funded account, it means you get access to a larger account, which isn't really your kind of money, which makes it, I suppose, a lot safer. You know, if you go into trading and you haven't got a lot of money, but you can trade and you can prove to people you can trade, they will give you access to large accounts for you to trade. You'll take a percentage. I mean, like I said, you know, I'm the same, I suppose. If I was to do something like that, it's a good way to get into it. Now, here's a top tip. When trading the bends and pullback strategy, you want to take note here, so do get a pen and paper. You don't want to be taking trades when the price is going sideways like this, okay? Because what does this tell me? That price is ranging, okay? Price is ranging. It's not trending like this here. Okay, there's a nice little crossover here. Okay, so don't get into trades when price is like this. Second confirmation is you don't want to get into trades like let me give you an example of a trade of what I mean. You don't want to get into trades like, I'm trying to find you example of a trade like here. Right, you don't want to get into a trade here. Reason being is because, you know, we've crossed over for a buy. You would be looking for something, okay, a trend up and a pullback and a continue up. But remember what I said at the start of the video. If price breaks these moving averages, well, not moving averages, they're BD zones. If price breaks the BD zones, it tells me that price is going to actually go into a downtrend, which it does. So if we're going to get a pullback, it has to be either below or above. Okay, so remember that. Okay, if we're going for a downtrend, we want to see the pullback happening below these zones. Okay, if we're looking for a buy, we want it to be above this, not below it. When you see something like this and price is below this zone, it tells me again, what is it telling me? That price is slowing down and looking to go into reverse, which it does. Price goes sideways. We then break below. Remember, this is my first confirmation. We've got a trend down. I'm looking for a pullback. Here we go. We're getting a pullback here. And then we take this trade. So again, how do we take this trade? We would either get into a BD arrow here, or you can do what I would do, maybe get into the stochastics. Our stop loss above the high here, above this zone. So maybe around a 61 pip trade. And then as you can see here, price continues down. Okay, if this pullback went higher than this red line, I would not take the trade, because it tells me that we could potentially go into an uptrend. So we're looking for trades in between these zones here. And as you can see here, this particular trade went 180 pips. You know, pretty simple. So let's get a set of rules set up. Okay, we're looking to trade the bends or pullbacks. It doesn't particularly really matter what we're trading, but we're looking for a crossover. Let me just move my webcam and I can actually zoom in here. So our rules, okay, everyone, is we're looking for a crossover. Doesn't matter if it's the BD zones or it's the moving averages, whatever, a crossover. So a crossover and clear sign price is reversing. Okay, reversing. So a clear crossover and clear sign that price is reversing. We're then looking out for our first point, which is, remember, trend down. We're then looking for our second point, which is a pullback. At the top of the pullback, we're looking for two things: a BD arrow or stochastics. Okay, we will not enter a trade if two things happen. Stock is not overbought or sold, or price breaks the BD line or moving average, right? Again, it doesn't matter if you're trading the BD, okay, or we're trading this with price action, okay. Let me show you an example of one using price action, and you probably will understand what I mean. Okay, here's a perfect example, Ron, of here, right? Look, okay, uptrend, yeah, you see that uptrend. When do we go overbought on the or oversold on the stochastics? Here, at this point here, but we're broken below the moving averages, so it's contradicting itself. It's telling me that price is going to go into a downtrend, but am I looking for a buy because the stochastics has gone oversold? We don't take trades like this, okay? And as you can see here, even though price went up, I wouldn't take that trade. I'd want to see something like a clear crossover. Again, here's another example. We've crossed over and there's no trade here. Now, because we're trading the 1 hour charts, do remember we're going to get a lot less signals, okay? You know, you might do maybe 3 to 5 trades a week. But the plus side to it is it's a simple strategy. It teaches you about trends and pullbacks. It also is a lot easier for you to trade. You can monitor trades throughout the day because we're trading the 1 hour charts. You know, you've got plenty of time. And also, it really does maximize those pips. I mean, if you truly understand this strategy, how some of our BD members are absolutely killing it, okay? I mean, I'll show you an example of what I mean here. Here's a prime example. okay, you have a trade like this, we go overbought here, okay. If you have a stop loss of here, okay, so if you have a stop loss of around a 30 pip stop loss, I mean, this trade went to nearly 100 pips. It means in money terms, it's a 1-to-3 risk reward ratio. I'm risking basically £100 to make £300 back. With a 1-to-3 risk reward ratio, it means that if I lose the next 2 trades, I'm still winning. I'm still made £100. So if I win a £300 on this trade, take another trade here, lose it. I take another trade here and lose it. I've only done 3 trades this week. I've lost 2, won 1, and I've still made £100 profit. Okay, so that's what's really, really good about this strategy. So yes, that's today's webinar. Obviously, I will now upload this into the members area, and I'll also give you a kind of a details of my settings and stuff like that. So yes, I hope you enjoyed it. Like I said, if you're watching this on YouTube, thank you for being a part of it. If you do have any questions, like I said, let me know. And everyone, thank you.